And joining us now is Brian Summers, who is the Senior Aviation Business Editor at Skift. Brian, great to have you here with us today. What would you say is the current state of the low-cost carrier industry?
Yeah, thanks for having me. I can report some good news about low-cost carriers, short-haul low-cost carriers. Those are the airlines like Frontier and Spirit in the United States that fly maybe 1,000 miles, 1,500 miles or less. They're doing just fine. The problem is with long-haul low-cost carriers. The most famous one, almost everybody knows it now, Norwegian Air. Passengers love it. It has delighted people with ultra cheap fares, say from Los Angeles, where I am today, to London. So passengers like it. The problem is nobody's sure whether the model is sustainable. Norwegian Air loses a lot of money. They do okay in the summer because everybody wants to go to Paris or Stockholm or London in July and August. But right now, February, midweek, it's very hard to get tourists to fly between the United States and Europe.
And the other problem too is, for these routes, they're harder to drop once you get them established. What are some of the risks for these lower cost airlines when they do want to experiment with new routes?
Well, I would say that the biggest risk that these low-cost airlines have with long-haul low-cost is big airlines. So American, United, Delta on this side of the Atlantic, say British Airways and Lufthansa on the other side of the Atlantic. These airlines lost their shirts, 20 years ago when RYANAIR and other Southwest, other low-cost carriers came in. They do not want it to happen again. They have been absolutely fierce competitors with Norwegian and other airlines like this. And you'll find maybe if you want to go to London or Paris this summer, and you can go to Norwegian Air's website and you'll find a pretty good deal, but I bet you could go to AmericanAirlines.com and find exactly the same deal. That's been really tough for Norwegian. I don't think they expected legacy carriers to be such fierce competitors on a lot of these routes.
And what about pricing? Do you expect the low-cost carriers to raise their pricing soon?
Absolutely. I've been looking just for a family trip this summer to bring my family to Europe, and frankly, Norwegian Air's prices from Los Angeles, they're just not that cheap. Norwegian is having some trouble making money. They're losing a lot of money right now, and I think what they're going to do is when demand rises, and again, that's the summertime when everybody wants to go to Europe, they're raising their prices. So you're just not going to see, $99 or even $199 one-way fares to Europe during peak times this summer. You're going to see more like $400, $500, $600 one way, and it's like, why get off the couch for a price like that?
Right.
And so, Norwegian is just not stimulating the market like it once did.
This is a fascinating topic because a lot of us want to save money, but we also want to have a life. So this is the perfect place for us, right, to go to buy these tickets from. Will we always see these options, these low-cost carrier options?
That's a very good question. There's some folks out there that think Norwegian's model is so not sustainable that it's going to go bust. And these things can happen pretty quickly. So one day you book a ticket on Norwegian, and then next month or the month after they say, oops, we've run out of cash and we have to close our business.
Right.
There are some people out there that are fearful that Norwegian may not make it through the winter. I'm not necessarily one of them. Full disclosure, I did just buy a ticket on Norwegian last night for July, so I feel pretty comfortable about this, but it is touch and go time right now. February is a really tough time for any airlines, especially ones that rely on leisure passengers, right? So if you're American and United, you can sell a lot of first and business class tickets and you can be okay.
Right.
You sell them to business travelers, but not Norwegian.
How are they able to get these costs down so much? I mean, is it like a movie pass model where it's subsidized, and in that case, we know that's not sustainable at all?
Well, the truth is that their costs are not that low. Norwegian has slightly lower costs than a lot of the other airlines, but only a little bit, right? Norwegian's big thing is that they fly Boeing 787s. It's a great airplane. It burns very little fuel. The problem is the acquisition cost of that airline is enormous. And Norwegian doesn't have an edge because it flies it, right? Because British Airways flies it, United flies it, American flies it, and so they just don't have that much of a cost advantage on long haul flights. They have a little bit because they pay their pilots and their flight attendants less than maybe a major carrier. It's not that much, and that's why their fares aren't all that low. They are low, they are lower, but they're not that low.
We saw Boeing shares actually pop after earnings recently, and that coming off of strong demand for its airlines. Do you anticipate that some of the carriers themselves are going to get a little bit more interested in trying to see what is more energy efficient, what is less fuel burning, excuse me, in the case of some of the aircrafts that Boeing does offer, and how that can contribute to their own margins for their business, for the carriers?
Well, it's funny that you ask that because these things come in waves. You probably remember 6 to 9 months ago, people like me were writing these frantic stories about fuel costs were getting more expensive and nobody knew how high it would cost for oil in the future, and airlines were getting very smart and they wanted the most fuel efficient airplanes, right? But now we're 6, 9 months later, fuel is not only back down, but it looks like it's going to stay back down. And nobody's really talking about that all that much. Airlines, they want fuel-efficient aircraft, but at the end of the day, what they want to do is save money. So if they can get an older generation airplane, it may burn more fuel, but because it's older, like say an older car, it's going to cost less to acquire, and maybe at the end of the day, you'll make more money flying it.
Right. All right. We just saw earnings from JetBlue, Spirit, and also from Southwest, LUV, love that ticker symbol, literally. Of these three lower cost models, which one in terms of earnings performed the best, do you think?
Look, Southwest always performs the best. I don't know how they do it. They've been doing it for 4 decades or more. They consistently make money. One of the things that they're very good at is they do not go out and they do not change their model. Right? So a lot of Wall Street analysts and even people like me say, why don't you charge for a first checked bag? Every other airline does it. It's money in the bank. It's easy. Southwest says, absolutely not. We don't want to do it. People think, my goodness, if they're not going to go out and get this money, they're going to make less money for their shareholders. But it doesn't happen. People absolutely love Southwest because it doesn't nickel and dime them, and it, amazingly enough, shows up in Southwest's earnings.
All right, Brian Summers, Senior Aviation Business Editor at Skift, joining us here today. Thanks so much for the time.